Second. Okay, I think it's working. All right, cool. All right.
Podcast number 3, bud.
It is 3. So today we're going to talk about getting pre-approved. So I think last time we talked about how to find a lender, how to find a real estate agent.
Where to start.
Yep. So now we're actually going to start talking about getting into the whole process of finding a house.
Yep.
All right. And so first step today is getting pre-approved. All right.
And I mean, getting pre-approved is a fairly easy process. I mean, I know most. You tell me in the perspective of a realtor. I mean, would you take somebody out that's not pre-approved?
So not necessarily. I mean, typically me personally, I usually will have a very significantly long conversation with them, and then, if they are insane, then no. But ideally, I want everybody pre-approved before I take them out. And the reason why is if you're going out house shopping, you're not pre-approved. You're window shopping basically. You have no idea what you can afford. You have no idea what your payments are. You're out there just kind of having fun.
The seller doesn't even know if you could afford the house.
I don't know if you can afford the house. You don't know if you can afford the house. The seller doesn't know. And that's not the goal of the exercise. The exercise is to buy a house, not to have fun.
And to get pre-approved is not. I mean, what a pre-approval is it's nothing hard. It's it's roughly. It should be at least a 30 to 40 minute conversation, in my opinion, with a lender. Maybe not even that long, but. If you're a first-time home buyer, I totally recommend you coming in and meeting with the lender.
In person.
100% in person. Getting pre-approved simply means that loan officer that has access to their company's money is saying, if X, Y, and Z makes sense and match, then we will lend you the money, assuming that you could present the proper documentation. And, getting pre-approved is a fairly easy step. Again, like I said, you got to meet with the lender in person. Mm-hmm. When you meet with the lender, what you need to do is really provide 2 years worth of tax returns, your 2 most recent pay stubs, and give me an idea of what you have in your bank statement or bank account. And when you're getting pre-approved, it's not just the lender telling you how much you could afford. Okay, it's actually the opposite. And that's what most people don't realize is they'll come in and say, hey, John, how much can I afford? Well, how much do you want to afford?
Yeah, I think it's very important to kind of know your comfort zone coming
Without a doubt.
So, if you're a first-time home buyer coming from an apartment or a rental, tell them this is what I've been paying in rent. I'm comfortable here. I don't want to exceed this, or, I feel like in our budget we can go up a little bit, but know that number before,
Absolutely.
Getting pre-approved. It's not a ceiling.
No.
Yeah.
No, and no lender should say this is where you need to be, or this is where you should be, okay? What you have to do is come in, meet with the lender, and really the questions that you need to have answered before you meet with the lender is, what are you going to be comfortable as a monthly payment? Mm-hmm. How much money do you have for down payment? Mm-hmm. When are you looking to buy? What area are you looking to buy? And what price point are you going to be happy in, okay? Most people, as we discussed earlier, go ahead and go online and already shop. Okay, homes, so they know the price point that they're going to be comfortable in. So basically, you need to come with the lender and have an idea of what your budget is going to be, how much money you need for down payment, and what price point you're going to be happy in as a family in a home.
Definitely, and I think the danger in when you basically just run online as opposed to taking that recommendation to sit down with somebody live and local to get pre-approved. There's a big difference between just not a regular, just an online lender. Anybody you can just kind of go to, and then sitting down with somebody in person. And we'll both talk to this. I mean, the difference with an online lender, a lot of it comes down to proof.
Yep.
They're also, I'll speak to a recent example I had with, lenders will use rates a lot of times just as sales tactics. Yep. So I had a recent situation where I had a client who, I typically will use John. I use a lender I trust, and basically because the numbers are accurate, and that's what I want as an agent. My recent example, the rates were artificially low, mm-hmm. The credits were artificially low. They went with that lender, and it was an awful nightmare situation. Yep. Delayed by weeks, barely closed, and so when you meet with that sort of anonymous lender where you can't meet with them in person, you don't know their face, you don't know their office, you don't know their team, their process, anybody on there. You always take that risk. So I think it's very, very important to find a local lender, somebody who knows the area for one, somebody who can tangibly touch their team of processors and underwriters as well.
And also, too, I mean, not everybody's going to be eligible for credits,
sure.
But a lot of there's a lot of credits to be had
Right.
out there, especially as a first-time home buyer. So there's some opportunity there to meet with the lender, a local lender that understands the marketplace. Yeah, and I always tell people too. So like primary residential mortgage, obviously, we're sitting in our headquarters here, our regional headquarters. We are local. We're a national company, but also a local company in the sense that we did last year $6 billion a year of business. And, out of this office is where all my underwriters in the state of Maryland, Pennsylvania, and Delaware and DC work out of. So it's a huge advantage for me. And to your point earlier, is like, a national lender or an online lender, a huge advantage is, if there's something that the underwriter disagrees with, hopefully I've vetted everything and the loan
Right.
officer vetted everything properly. But I could sit down with the underwriter who really has our checkbook and say, this is why I think it's a good loan,
Right.
and I can make it happen.
I mean, I joke with clients a lot about the underwriter's role in the process. Their job is to say no, which isn't really the case. But a decent loan officer will have worked with the buyer, will have scrubbed everything, will get them, the documents, all the documents they
Yep.
need. And so, their file should be in pretty good shape by the time you guys hand it to the underwriter.
And the truth is, too, what most people don't realize is a pre-approval letter is not even worth the paper it's written
Sure.
on.
Yeah.
And that's why, obviously we've been doing business for a while,
Right.
is because I've got a proven track record of following through with what I say and
Right.
actually bringing the loan to closing. Whereas, the pre-approval letter is just what the loan officer thinks that you could get qualified for.
Right.
So, or the pre-qualification letter. So, if you really want to take it one step further, and I think this helps you in your business, you get what's called credit approved. And credit approved simply means that I've taken your pay stubs, your bank statements, your tax returns. I've had you sign a borrower's authorization form, and I've actually given it to the underwriter to pre-scrub it. And at that point, the underwriter goes ahead and issues a credit approval. So when you go out looking at a property with a client, you could tell the listing agent if it's in a competitive market, or competitive bids, you
Right.
could tell the client, or the listing agent rather, that my client's already been credit approved by the loan officer and the mortgage company. It's just a matter of finding a home, ordering the appraisal, getting title work in, and getting homeowners insurance set up, and then we can close.
Yeah.
So that's a huge advantage, and that's something that we do offer. So,
And I think going back to the pre-approval versus pre-qualifications, I know one thing my buyers sometimes are a little taken aback by is some lenders, the amount of information they'll collect for that pre-approval or pre-qualification. And, for buyers who are out there getting pre-approved, better lenders will collect more information at the very beginning. It's one thing to say, like, I make $100,000 a year, and I have a credit score of 780,
Yep.
and I have zero debt. And it's another thing to show all the documentation
prove it.
to prove it. Yeah.
Yep.
So don't get dismayed when people say,
Yeah.
I want to pull your credit right there on the spot. I want to do
Yeah.
all this because
And send me your pay stubs, send me your tax
Yeah.
returns. Let me confirm that you
Yeah.
make $100,000, or you don't make $100,000 and write off 80, and you only make 20.
exactly. Yeah. I mean,
So,
it's
yeah.
that's a sign of a good lender.
Yeah.
Yeah. Not somebody who's just trying to hassle you. But yeah.
And another thing too, like when you do go in, so I encourage people to come in and meet. Again, I think that's an important thing. I mean, I always tell people at the end of the day, you're going to be borrowing money for us for 30, 15,
Sure.
20 years. So it's important for you to set up and make sure you're setting up your loan properly for that time frame. When we meet, what we're going to do is go over the three things, and right here is a booklet that I created, which goes over the whole home buying process, and then I make sure that my in addition to me, but also my staff that goes over and explains this. But there's three things that we look at when we get you qualified. We look
Right.
at your credit, your loan to value ratio, which is really how much money you're putting down as a down payment,
Right.
and your debt to total income ratio. Your debt to total income ratio is basically how much you're borrowing all in, including what's on your credit report, plus your new mortgage, and divided by your gross monthly income. So we go over that, then we tailor a specific loan to your needs. At the end of the day, look, every mortgage company has the same products. There's not going to be a special mortgage company.
Yeah. That's definitely correct.
It's everybody's selling roughly the same products. So, but it's what we could tailor to your needs, which is going to fit your need the best. And that's what we do when we meet. And then when you're done meeting with me, okay, you're going to walk out with a cost estimate. You're not going to walk out and say, yeah, I was pre-approved for $300,000 home, And then when you meet with Quincy, Quincy's going to say, great, is that within your budget? You're going to know an idea of how much the payment's going to be, how much the closing costs are going to be,
Right.
how much cash you need for down payment closing. So it's really, it's important, and you should always walk out with a loan
And
estimate.
I mean, I personally think on the real estate side, I think that's probably the most important part of the pre-approval.
Mm-hmm.
Like you said, a letter's a letter.
Yep.
But having the buyer understand the whole breakdown of the cost,
Yep.
the payment, the full payment, including taxes, insurance. And granted, it's estimated, but I mean, we can get pretty close.
Yep.
Having them understand, their closing costs, the loan fees, all that stuff. I think that's the most important part of the process.
Yeah.
So
I mean, you got to know what to expect,
definitely,
and that's exactly what we do.
yeah.
Um,
So let's talk a little bit. I think the biggest question we always get is rates.
Yep.
People always want to know. They always rate shop.
Yeah.
Talk about that a little bit.
so
What affects rates?
So rates are really, it's affected basically by the 10-year bond market.
Mhm.
Okay, but we're not a local economy. We're not a national economy anymore. We're a global economy.
Right.
So, anything happens across Europe or anywhere else significantly, you could see rates change. Okay, where before it was really just on the 10-year. So rates are like stocks. I always explain it that
Sure.
way. It's not as volatile as stocks, but they go up, they go down, and it's all about timing. Like, I can't ask to buy Google at $100 a share when it's selling at 500. Okay,
You buy Google at $100 a share at all?
no, I don't think so. Years ago, you could have.
Okay. Yeah.
That would have been nice. So it's really all about timing, and in order to get a rate, it's dependent upon your credit score and your loan type.
Right.
But I always tell people, like, a rate is very important, but at the end of the day, a rate's a rate. You need to make sure it's within your payment that you're going to be comfortable with, because you'll typically get a lower rate on a government loan, an FHA or a VA loan.
Mm-hmm.
And with an FHA loan, your payments are typically higher than they would be on a conventional loan
Mm-hmm.
because you have higher mortgage insurance. Do you want to brag to your neighbors that you got a 3.25% rate, but your payment is in an uncomfortable zone? Or are you happy with a 3.625 rate and you're comfortable with your monthly payment?
Right. I
So
mean, it's all at the end of the day, it does kind of come down to the payment. I mean, you have to weigh all the numbers.
absolutely.
And I also want to stress to buyers out there that rates are not the end all of
Mhm.
everything. I mean, you really need to take a lot of things into consideration. I mean, there's rates certainly are going to affect a lot of things. There's also has to be the reputational lender is a big thing. Going back to the example I was using before, rates were in line. I think that particular buyer saved a couple $100, and I mean, just talking about disaster. And so,
Yeah, but she had to expend her mover probably.
sent
She had
mover,
to change her homeowner's
there's
insurance.
costs
I mean, it was
associated. Closing costs are more expensive.
Yeah.
Everything gets extended. So if we're talking the difference of this rate, and it's just so minor. But one lender has a great recommendation. The other lender is just some person you've never met before. I mean, I'll take the recommended lender all day long.
Yeah, I mean, it's a reputational business, and
Yeah.
it's dependent upon your reputation to get things done.
Definitely.
And again, too, like to your point, is difference in rate. A difference between, for example, 3.5 versus 3.625. That's an eighth in a
Right.
percentage rate. It's 8 cents per thousand.
Right.
So on a $100,000 loan, you're talking, what is it, $8
Better
A
than
month.
I am.
a month. So we're really not talking very much money. That's
Right. Yeah.
that's $2 a week.
Right.
So it definitely makes a difference, but it's not going to make or break it.
Right.
So the other topics too, whenever I meet with a client, they're like, well, I don't want my credit pulled. I hear that all the time.
Right.
Well, unfortunately, in order for me to do my job properly, I need to pull your credit. And, I always tell people there's credit. We look at credit in credit bureaus, Equifax, Experian,
Mhm.
TransUnion. They're the 3 credit bureaus we always pull. Okay, there are 3 credit bureaus out there. They look at a credit pull from a mortgage company not as bad as a credit pull from like American Express, Visa,
Sure.
MasterCard.
Right.
When you pull your credit with a credit card, that's bad liability.
Right.
So you're going to go ahead and get a bad adjustment to your credit score. When you do a mortgage company, your credit score is going to go down maybe by 2 points, but
Right.
it's not going to make or break you from getting a loan.
Exactly, yeah.
And credit's good for 120 days. So that's what most people don't realize is as long as you close within 120 days
Most
from
people
that
do,
withhold,
yeah.
yep, exactly. Then at that point, you don't need to repull your credit.
Right.
And if we do need to repull your credit, hopefully it didn't go down. Most likely it doesn't unless you've missed a payment.
Exactly.
So
Oh, perfect. I think that does it, right?
I think so.
I think so.
Yeah, and again, I think to your point, it's like when you meet with a client, you usually do a consultation before you go out, or
Exactly.
you do it when you're at
Always,
an
yeah,
office,
yeah.
or at a home.
Yeah.
It's the same concept. We work around everybody's schedule, meaning that I like to make my last appointment at 6 o'clock, the latest,
Right.
during weekdays. That way I get home by 7:30.
Sure.
But we can make it happen, and we tailor things specifically to you. You're going to walk out knowing what you're about to get yourself into.
Yeah, I think to sum it up, the basic principle is this: when you get pre-approved, you need to walk out and feel comfortable. Comfortable that you can buy a house.
Yep.
That's just very basic. That you understand the money involved, and that you're going to be comfortable with the payment of the house.
And you chose the right team.
Right, and that's at the the end of the day, that's what the pre-approval process is all
Yep.
about. It's not so much about just here you can afford $300,000.
Yep.
It's okay. You want a $300,000 house? Great, we can do that for you.
Yep.
We can help you, and you will be fully knowledgeable of the process and comfortable in doing so.
Yep.
That's the basic principle.
Absolutely.
So, all right. So again, I don't think we did introductions. I'm Quincy Wilson. Yeah, I'm Quincy Wilson from
call.
Cummins and Company Realtors. This is John Wald from Primary Residential Mortgage, and this is episode 3. And so John held up a booklet. We will put a link up to that at some point, and we'll try and get a link up to a copy of a loan estimate too, so people can
Yep.
see that. And so we're doing this on Facebook Live. After this is our 3rd episode. After this is actually going to turn into a podcast. So you'll see some stuff on Facebook, and we'll have all the links for that as well. So again, the goal of this whole thing that we're doing is eventually to have people ask us questions. So along with all the links, we'll do email addresses. So if there's anything that you want answered, any question that you're dying to ask, feel free to email us, and we'll answer it the next time around. So we're going to do this every 2-ish weeks.
Yep.
That's the plan.
That's perfect. Yeah.
All right.
If any other topics too,
Sure.
we've got a list of topics.
There's a list of topics, and we'll hammer it out the financials pretty hard on it, but we'll pretty much follow the whole process of buying a house.
Yep.
All right.
Well, thanks for tuning in.
Thanks.